Hey everyone, welcome back. Ready for another deep dive?
Always ready to dig in.
Today we're tackling market trends, specifically how to read them.
Sounds good.
We've got some great source material on two key concepts, accumulation and distribution.
The building blocks, really.
Yeah, they're all about buying and selling pressure, right?
Exactly. And how those forces move markets.
And that's what we'll be unpacking today, how these forces shape those trends we see every day. So let's start with accumulation. Seems pretty simple at first glance. More buying, higher prices.
It is. Think of it like, like collecting something. Stamps, maybe?
Okay, I like that.
Every time you add a new stamp, the value of your collection grows a little, right?
Yeah, and the more rare stamps you add, the more valuable the collection becomes.
Exactly. It's the same with stocks. Consistent buying, especially if it's coming from informed investors, well, that builds upward pressure.
It's like building a tower, brick by brick.
There you go.
Yep.
A tower of demand driving prices up.
So we see prices going up. How do we know it's really accumulation and not just, I don't know, some random blip?
That's where volume comes in.
Volume.
If you see a price increase alongside a big jump in trading volume, that's a good sign.
More people buying in, basically.
Yeah, that's the fuel. It means there's real conviction behind the move.
Not just a few folks making a quick trade.
Right. This is sustained buying pressure, and that's what creates an uptrend.
Interesting. So accumulation is like the engine driving those upward trends. What about the flip side? Distribution.
Distribution is, think of it as the opposite of accumulation.
Less buying.
And more selling. Instead of adding bricks to that tower, we're taking them away.
Got it. And our source, it talks about how this selling pressure, it leads to downtrends.
Yep. When more people are selling than buying, prices naturally fall, like air leaking out of a balloon, slow and steady.
Okay, that makes sense. But is distribution always a bad sign?
Not necessarily. Sometimes it's just profit-taking. Investors who got in early during the accumulation phase, they might be cashing out, locking in their gains.
Makes sense. They rode the wave up and now they're getting off.
Exactly. It's natural, and it doesn't always mean the party's over.
So how do we tell the difference between, like, healthy distribution and a sign that things are going south?
Look at the volume again, and the speed of the decline.
Okay, so a gradual downtrend on low volume, maybe not a big deal.
Could just be some profit-taking, yeah. But a steep drop on massive volume, that might be something to watch out for.
Because it signals fear or panic selling, maybe.
Potentially.
So we've got these two forces, accumulation and distribution, kind of battling it out in the market.
It's like a tug of war.
Exactly. Buyers versus sellers.
And the direction the market moves, that depends on which side is winning at any given moment.
So trends are basically a reflection of this constant push and pull.
They are. And understanding that dynamic, that's key to interpreting what the market's telling you.
It's like learning a new language almost.
It is. Once you understand the forces at play, you can start to decipher the signals.
So recognizing accumulation early on, that might signal a good time to invest, potentially.
Could be, yeah.
And spotting signs of distribution, that might be a signal to, I don't know, maybe manage your risk a little more closely.
Exactly. It's about using these concepts to make informed decisions, not necessarily to predict the future.
Because that's impossible, right?
Pretty much. But, even though you can't predict every twist and turn, understanding accumulation and distribution, that gives you an edge.
Definitely. Helps you make sense of the chaos, at least a little bit.
And remember, these principles, they apply beyond the stock market, too.
Oh, yeah. Like where?
Real estate's a big one. You see accumulation and distribution happening all the time there.
Makes sense. Prices rising as more people want to buy in a certain area, then maybe cooling off as demand shifts.
Precisely. And you see the same dynamics in commodities, collectibles, even things like cryptocurrencies. It's everywhere.
Wow. So it's really a universal concept, this push and pull of buyers and sellers.
It is. And it's constantly shaping the world around us.
Well, there you have it. Accumulation and distribution. The forces driving market trends. It's not about predicting the future, but it definitely helps you understand the present and maybe make some smarter decisions along the way.
Couldn't have said it better myself.
Now, thinking about these forces, it makes you wonder, how much do these same patterns play out in, like, the job market or even in relationships? Something to ponder, right?
Definitely something to think about.
Until next time.
See you then.